Bring in show music, please.
Today on Squawk Pod, 3 big stories. President-elect Donald Trump has picked Robert F. Kennedy Jr. for Secretary of Health and Human Services. What does it mean for the future of healthcare policy? Former Walgreens Boots Alliance executive John Driscoll shares his concerns.
Our industry is the envy of the world. And I think many of us in industry are concerned that what he doesn't understand, he might damage.
Then, Home Depot CEO Ted Decker weighs in on the state of inflation and how the company and consumers are handling the pressure.
They want to take on projects, but they're still just a little bit uncertain with the overall economy.
Plus, ARK Invest's Cathie Wood on her big bet on Tesla and how Elon Musk's new government role might make an impact.
I think he's going to do a lot to bring efficiency to government.
I'm CNBC producer Zach Vallese. It's Friday, November 15th. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin.
President-elect Trump has selected vaccine skeptic, among other things, Robert F. Kennedy Jr. as his pick for Secretary of Health and Human Services. And vaccine maker stocks pulled back a little on that news yesterday. For a look at the potential broad impact on healthcare and pharma, let's bring in John Driscoll, former president of Walgreens Boots Alliance, U.S. Healthcare, and now a senior advisor, their senior advisor. What do you think, and do we know what the implications of this pick would be? We can't know for sure. We don't know if some of his views have evolved. But if you take some of his prior statements at face value, John, a lot of it is populist sort of bunk, bunk that's been debunked, really. And I don't know if he has different viewpoints now, but a lot of it would be, I would think, dangerous and probably counterproductive to a healthier country.
Well, I think, Joe, that many of us in industry are really concerned that he represents a clear and present danger to one of the greatest industries of the world. You know, over 4 million years of human evolution, we extended lifespan by about 11 years. And in the last 120, we've more than doubled global lifespan to 73 years old based on vaccines, public health, and biopharmaceuticals. And I think our industry is the envy of the world. And I think many of us in industry are concerned that what he doesn't understand, he might damage.
Even, John, I've made this point for years. Okay, I get it. Food additives, it's not natural. I mean, there was a time when we didn't have additives, and I wouldn't eat something that was sitting there for after a day. There's reasons for pasteurization. There's reasons for a lot of different preservatives that are put in food. Then I think about, as you said, biopharmaceuticals and the amount of genetic engineering that goes into most medicines now, and cancer and monoclonal antibodies and all the progress we've made there, to just arbitrarily say anything genetically modified is bad. Then next time you need some type of treatment for some horrific disease that you have, don't use anything that's been developed through science. And that makes no sense. Now, on the other hand, John, I will say that in this country, we have a lifestyle problem, definitely with food and the amount of food and the type of food that people eat, leading to these obesity rates and rates for diabetes and anything related to what happens when you're obese or near obese. So, I mean, I get it. I get that we need to be a healthier country, but it'd be nice if you had some facts on your side if you were actually, dictating what people need to do.
Well, Joe, to your point, he's raised good questions about the epidemic of obesity and chronic disease in the food industry. But, the food industry is the ag department, and he's raised good questions about, I think, reasonable questions about environmental pollutants, and that's the EPA. We're talking about HHS, 80,000 employees, a $2 trillion budget. programs that affect 170 million people in Medicare and Medicaid, and drugs and public health and vaccines that affect everyone. This is a completely different mandate and set of responsibilities. And I think it's reasonable to ask whether he's qualified, has the management chops, and understands medicine and science enough to really lead a partner to industry that is the best track record at delivering solutions over the last 100 years.
It is probably usually a pretty good idea for the head of something like HHS to have that type of background. But even a person that is trained does rely on all the people beneath him that for a lot of the actual policies, like what Medicare covers, for example, with new drugs or whatever. Is it possible that he could have good people underneath him and just sort of make overall decisions that might not be as deleterious to everything? Or do you think he would distrust any of the experts beneath him? I mean, there's some experts, I think Fauci should have been distrusted, to be honest. That's my own personal opinion. But on the other hand, you do need to trust someone when you're doing these things.
I think he's probably going to have a two-part challenge. I don't think he's really got any experience that I know of in either science or medicine, because these are very technical areas, and people spend their entire careers developing that level of expertise. And there's a range of opinions in science and medicine, but generally you look for people with some qualifications there. And it's not that some of his questions aren't reasonable. The real question is whether he's qualified to even understand or lead. And this is 11 agencies. This is the NIH, which is the foundational venture capital fund for biopharmaceuticals. That's really to help put us in a position to lead in biopharmaceuticals. And I think it's reasonable to ask whether we should probably require that someone who has some background in medicine and science to lead these great organizations.
Yeah, I mean, you do want to. I think President-elect Trump disruption is a big thing for him, and draining the swamp, whatever you want to talk about. But then again, as you point out, you don't want to throw out necessarily the baby with the bathwater, and there's probably more good that comes from a lot of these things, and it's important, and and air could affect millions of people. But take, for example, vaccines, and I have this notion: if certain countries over in Europe that don't use mercury in vaccines still have higher autism rates, you can probably say that it had nothing to do with the mercury that was in that, and yet he will still hold on to that notion in kind of a mythical kind of a way. But then again, is there any way, John, that you think that immune responses to some of these things could result in things that we have no idea about, or do you think we have a pretty firm grasp of these things?
Well, again, I'm not neither a doctor nor a PhD in science, but you point out a really good fact that today he appears to continue to spread the concern about mercury in vaccines that honestly have not been in our vaccines since the early 2000s, and that sort of going from being a critic to a skeptic, sowing distrust, I think is a real concern for those of us in the healthcare industry who rely on the public to partner with us to use these novel vaccines and pharmaceuticals. In my lifetime, we've seen this process of research and vaccines and biopharmaceuticals transform conditions like cancer, like lung cancer, which used to be a terminal disease, into something that's manageable. I mean, my sister died of cystic fibrosis. Now my relatives with cystic fibrosis can have a normal life. And that's because of the partnership between our biopharmaceutical industry and the federal government. And I'm really concerned that the wrong leader might sort of mess that up.
And even for me, some of his past views on environmental issues, I'm almost glad he wouldn't be put in charge of with some of the things I've seen that he's claimed about that. I'm not sure I'd want him at the EPA either, so I don't know. Thanks, John, and appreciate what you're talking about. It's important. It's important to think about these things, I think.
Thank you, Joe.
Cheese will be next.
Next on Squawk Pod, Home Depot CEO Ted Decker reveals how the company is navigating economic uncertainty and price pressures with interest rates in flux. He explains how they're managing through it all.
We think with our merchants and our supplier partners in particular, we're the scale player. Any tariff that would happen would be broadly dispersed across our industry, and I'd bet on our team to be able to manage through that the best.
This is Squawk Pod.
The Home Depot is honoring one of its founders, Ken Langone, here in New York City today. NYU Langone Health is going to be cutting a ribbon-cutting ceremony for the Home Depot Emergency Department in Cobble Hill, Brooklyn. The Home Depot Foundation issuing a $10 million grant to support the site's ambulatory care center in Ken's honor. Earlier this week, the Home Depot reported third-quarter earnings and revenue above street expectations and raised its full-year outlook. The stock has done well. For more on all of this, we want to welcome Home Depot's chair and CEO, Ted Decker. He joins us exclusively and on set for the first time. And Ted, welcome. It's really great to have you on set with us.
Thanks for having us.
We're going to talk about what's happening with the Langone Center in just a little bit, but why don't we start with the numbers from earlier this week? You guys had strong numbers. You raised guidance, but that raised guidance was based on the idea of what you've already seen.
That's right.
It wasn't about the outlook. So why don't you tell us what you've seen since that last quarter closed?
Well, as we said, we raised our outlook to -2.5% for the year, and that was really based on just phenomenal October weather. People were able to engage longer, and then the hurricanes. We're still seeing pressure on the larger remodel projects. So when we carried through those better results and some expectation on hurricane into Q4, but fundamentally we're still looking for that turn in remodeling. To really drive the bigger project demand in the business.
Have you been surprised that mortgage rates have actually climbed since the Fed started cutting interest rates?
It was a surprise. I mean, we're all looking for housing to unlock, and one of the key reasons people aren't moving is because of those high mortgage rates and locked into the lower rates. Our housing turnover now is at a 40-year low at just on 3% of overall U.S. homes turning over. So we were hopeful with the rates coming that mortgage rates would come down, but in fact, they've gone up by the same amount that short-term rates have come down. So this will all come to pass and markets will get to equilibrium, but we still have some work to do on those mortgage rates.
We have watched the stock market really climb pretty significantly post-election. A lot of investor confidence that you see kind of playing out. And the question we've been trying to figure out is that carrying over into consumer confidence in the form of spending? Have you seen that in your stores?
Well, we have a little different situation. I mean, we have, first of all, an extraordinarily strong consumer. I mean, our consumer is gainfully employed, seeing higher wages, equity balances, and then the highest store of value for our customer is their home. 80% of our customers own their home, and they've seen tremendous appreciation in their homes since 2019, as much as 50% increase in home values. So our customer has a store of value. They're staying in that home, it's aging, and they want to take on, they tell us they want to take on projects, but they're still just a little bit uncertain with the overall economy, what's going to happen with tax rates, what's going to happen with inflation, and ultimately interest rates. But there's building up a pent-up demand, if you will, for these larger remodel projects.
Does resurgent inflation scare you more? Would you like rates just to be cut for housing, or do you still worry about inflation not being totally conquered? And you should know, probably.
Well, I think, again, what translates into a mortgage rate would be the thing that we're most interested in, or HELOC rate. So there's $11 trillion of tappable equity in U.S. housing. The store of value of the entire U.S. housing market is over $45 trillion. 11 trillion of that is available for withdrawals to fund larger remodel projects. We used to see something like 80 or even $100 billion a quarter of HELOC withdrawal, a lot of that going into home improvement projects. That's down to like $20 billion.
But with lumber and all the other stuff that you must be one of the largest providers of lumber. You know about commodity prices long before anybody else does.
And those have come down. So
is the genie back in the bottle? Can we relax on inflation?
I think on goods and what we're seeing in our business and pressure from our supplier partners, we are well past. We've digested that rapid increase in prices.
So you lower rates. You're ready.
Well,
you're ready for rates.
We're ready.
Does the threat of tariffs change that picture? How much of the goods that you're bringing in are coming from overseas?
That could. So we're sourced, over half of our product is sourced in North America, but we certainly get a good bit from Asia and China in particular. We've been through this before with the tariffs that were imposed in 2017, 25% tariffs in a good percentage of our goods. And we work through that. We work with our supplier partners, we work with our supply chains, trying to make sure we can still bring the best value on shelf for our customers. Our suppliers have done a meaningful job of diversifying out of China in the last 4 or 5 years, but there is still a significant base of manufacturing of our type product in China. Too early to tell what will happen there, but we think with our merchants and our supplier partners in particular, we're the scale player. Any tariff that would happen would be broadly dispersed across our industry, and I'd bet on our team to be able to manage through that the best. The thing that we're much more interested in is corporate tax rates. Home Depot is one of the absolute largest in nominal terms, highest payer of corporate taxes. Some quarters, in fact, we are the single highest payer of taxes in the United States. So keeping that rate down at 21%, or even some talk of that rate going lower, is terrific for our business because we use that windfall, if you will, back in 17 of lower corporate rates to reinvest in the business. We're building new stores again. We're the only player in our industry, and really big box in the United States of any nature, who are building stores.
What do you think would be? Don't call it a windfall, Ted. Please. No. Elizabeth Warren's watching.
Well, what would be a good rate? I mean, obviously 0 would be a good rate. But no. But when you think about this just rationally and fairly, what do you think is the right place?
I mean, stability probably matters as much as anything. And if we would just have stability with the rates 21. We're at today, that would be fine. Lower would be fine as well. Every investment we make, we measure on an after-tax cash flow return on the capital deployed. So with lower rates, you can fund more projects.
How much of the taxes shifting? I mean, obviously, clearly shifted in 17 for you. But in terms of your long-term planning, when you guys sit around and say, okay, what's the plan for 25, 26, 27, 28? When does that meeting happen for you where you say, okay, we have different tax rates now? And then the other question is, how much of that rate do you say, okay, that's going to go to the bottom line, and that part we're going to invest, and that part, when does that happen for you?
Well, we always scenario play different rates for sure, but we don't look at our investments. Taxes don't determine our investment profile. We're always looking at how we can improve the business, how we can grow the business, and make the required investments. So I wouldn't say taxes influence the bulk of our investment decisions, but certainly on the margin, if you're looking at a particular investment of, say, a single store, and you're very close to a hurdle rate of that single store making sense, a tax rate could come into that picture for sure.
Hey, Ted, I would assume that you guys are planning as if tariffs are going to come in. We've heard reports of other people bringing in as many things as they can to the United States ahead of January. Are you doing that?
We're not really doing that. We're so far ahead in our cycles. So like all the holiday products here, the stores are set, our gift centers are set. We just signed off yesterday on our 2026 patio program. So we're so far ahead. We're not gonna jump through hoops on a short term. Cargo.
Are you doing longer term planning for what you could do?
Absolutely, and we're working scenario planning with our supplier partners. Again, we've seen a good bit of diversification. We've seen about of the sourcing that has moved out of China in the last, 5, 6, 7 years. We see about a third has gone to other countries in Southeast Asia. A third has gone into Mexico, and a third has come back into the United States even.
We should bring up the this past week of someone who was a friend of the show, but obviously one of your founders, someone who was very important, Bernie Marcus.
Yes, Bernie Marcus. Funeral was last week, and what just an absolute giant of a man. What he did for Home Depot, the state of Georgia, in the country, in the world, in fact, in total is just a remarkable life. We're forever indebted to Bernie. He left us with really what is the core backbone of our company. That's our culture and our values, and those will live on forever. And we're just incredibly grateful to have had the time with him. But it was a very emotional week for the Home Depot family last week. And thank you for asking.
You had a very appropriate send-off for him too. I think you all.
Well, we're orange-blooded, and I should have maybe worn my orange apron today.
Not the tie.
But one of the most remarkable things last week, we had hundreds of tenured associates in Atlanta line the road into the temple and then later into the cemetery to the gravesite. And it was just such an outpouring of love for truly one of the great Americans of all time.
And you are here honoring another one of your founders, Ken Langone, who
yes.
is another friend of the show.
We're just blessed. I mean, each of Arthur Blank and Bernie Marcus and Ken Langone have given back so much to the community. Arthur Blank, the new children's hospital in Atlanta, just opened a few weeks ago. This is a brand new bespoke Arthur M. Blank Children's Hospital that opened in September. And you all in New York know how much Ken does with NYU Langone. And we're ribbon cutting later this morning a new ambulatory center in Brooklyn. So Ken will be there, and some of the Home Depot team will be there to support him.
Please give him our best.
Absolutely.
We're glad to hear this too. So on the lighter side of things, we've watched Skelly, the huge skeletons that took over not just for Halloween at this point. I see some of them still around with Santa Claus hats on. These are these giant skeletons that some people keep out year-round at this point.
Yes.
To decorate them for the coming holidays.
I think we have much more marketing benefit with Skelly than actual sales benefit. But one of the funniest stories I've heard about Skelly is there was a customer sent a letter that his HOA is always asking him to take him down because you can only have the Skelly up for any given season, decorations for so many days of any given holiday. So he just rolls through. He'll put a red on him for Valentine's Day. He'll put green on him for St. Patrick's Day. So he's like, I'm in compliance with my HOA, but Skelly stays up.
That's the way to go with it.
Yeah.
How big of a decorating season is the holiday season? I know you've got Santa Clauses and Disney characters.
Yeah. So not as meaningful for Home Depot. Our Christmas, if you will, is in the spring.
Okay.
But our merchant team has built a tremendous decorative holiday business in Halloween, but then also for the Christmas season with trees and lights and animated characters. We have great programs with Disney characters and our own sort of bespoke internal private branded product.
How long have you been at Home Depot?
2.5 years.
Almost 25.
Oh, 25. Okay.
And in this role like that. Yeah.
Because there was a time when, and speaking of Ken, he's very shy and doesn't really talk a lot, but the stock's almost at an all-time high, and it's been one of the greatest success stories. I mean, I can't believe Sam Walton, another amazing person, in his lifetime, he built Walmart, and the same goes for Home Depot. But there was a period where Ken was really angry at some of the management. I'm not going to mention who it was at the time, but Home Depot had lost its way. Do you historically know what happened in that rough spot and how to avoid it happening next time? Do you remember the period I'm talking about?
Well, Ken would tell you he never has sold a share, so he's held that equity. He is the biggest supporter of ours. I mean,
Ken, do you remember what I'm talking about, though? Do you remember that period?
We had
a supply company that didn't work out. There were I think even some of the employees, the same Home Depot spirit wasn't there or something.
Well,
how did the company lose its way, and how do you prevent that from happening?
The key for us and what we keep front and center truly are the values of the company. We have two symbols on our apron. We have a values wheel, things like giving back and doing the right thing and respect for all people. And then our leadership principles are inverted pyramid, where you think of an organization where the leaders are at the top and the troops, if you will, are on the bottom. The founders inverted that, and the leadership team is on the bottom, and our responsibility is to support our associates, our frontline associates. As long as we remember that and never forget that, and every time I talk to Ken, that's how he ends the conversation. He says, Ted, don't forget about the kids
I'm going to call him and
store.
ask him who it was. I think it might have been, as I said, I'm not going to mention any names, but I'm going to call. You remember? Yeah. What happened? What was how did the...
It's turned around.
I know it has now.
Right back to the focus.
Frank had a lot to do with that.
Frank Blake is magic.
He's almost a savior.
Yeah,
almost.
wonderful, wonderful guy. And Craig Menier as well, just terrific leaders.
Yeah.
Right. Okay.
Well, Ted, we can't thank you enough for coming in here. We do appreciate your time, and we'll hope you come
being
back.
so tactful.
Thank you.
Not throwing anyone on
Thank
the
you
bus.
so much. And also two plugs. So new store in 61st and First. We relocated our store.
Big deal
in
for
the
us city
Bloomberg.
folk.
In the
Oh yeah,
Bloomberg.
you do a lot of that.
It is a big deal for us.
How'd that new bathroom you put in go? Is that everything working well?
Got to call the contractors.
I need one where I can step into it. You know, have you seen those?
No.
Bathtub where you open a door to step in.
Oh, yeah. So you can take that. So what's the other?
You'll see.
We're reload 61st and First, and then our Brooklyn store in Hamilton Avenue is reopened as well.
Yeah.
So
My team likes that store a lot.
We don't. Yeah, your team. We don't even feel comfortable in Lowe's, which is a lot easier to go into than.
I wouldn't feel comfortable there either.
Well, I don't.
Okay, thank you for
Thank
being
you.
here. We'll see you at 61st Street and First.
Next on Squawk Pod, Tesla and Bitcoin surge in the wake of President-elect Donald Trump's election victory. ARK Invest's Cathie Wood joins us to share her outlook.
We're looking at Bitcoin now being viewed as a new asset class. It's not just a global monetary system, it's a new asset class.
You're listening to Squawk Pod with Joe Kernen, Becky Quick, and Andrew Ross Sorkin.
Up and Andrew, Q.
Our next guest, ARK Invest CEO and CIO Cathie Wood, her ARK Innovation ETF, I should say, is up about 12% since Donald Trump's election last week versus 3% for the S&P 500, but close to 15% of the ARK ETF is invested in Tesla, and some are concerned about Elon Musk's new government job and whether it could keep him from devoting enough time to his electric car company. I should also note, while ARK Invest is up today, or I should say up recently, on a longer-term basis, there are a lot of losses, and we can talk about that too. But Cathie, it's great to see you. You've been a big bull of Elon's, almost from the beginning. And so the question is, when you see him in this role at Mar-a-Lago, and obviously his stock is up too, so it's benefited you, but do you say to yourself that he's able to manage all of these things? What first comes to mind when you see this?
Well, what first comes to mind is I think he's going to do a lot to bring efficiency to government. And what we're happy about is he's not going to be a part of government per se. He's very careful to say he'll be working from outside the government with Vivek Ramaswamy, which is also very good, especially from a healthcare point of view. And they will use technology and other sensible measures, I think, to really rein in government spending. So I think it's a good thing. You know, we've faced this question about Elon for many years as he started one company after another. But the way we're looking at this is Elon understands that we are at the threshold of a convergence among many technologies, AI being at the center of it, and proprietary data is key to winning. So he has more proprietary data from all of these companies than I think any other CEO.
When you see the stock up as much as it is, just even since the election, and his role in it, what do you think? What is the rationale? What is the economic rationale in your mind for that?
Well, there are two reasons. One, in Tesla's last earning call, we got more information about Tesla's autonomous strategy. I think after the election, as we're thinking about what might happen here, right now, autonomous regulations are state by state. there is federal oversight, mostly for safety. We would not be surprised if the regulations become national. And if that happens, then Tesla's in a really good spot.
So you think this is his influence over NHTSA?
No, NHTSA is safety, and I think if you look at all of the accidents, and it is interesting that the media scrutinizes every one of Tesla's accidents out of the 45,000 or 40,000 per year, which involve a death. If you look at NHTSA's conclusions after going in detail into these accidents, it has concluded in the past that Tesla has the safest cars on the
Cathie,
road.
what I'm trying to understand, and this is the question: the stock has moved materially since the election, and as you know, I think this guy's a genius, Elon Musk, and I think Tesla's done wonderful things. But I'm trying to just understand the price action. I could see somebody make an argument that tariffs that'll prevent other EV makers from China to come in should be helpful. I could see an argument that if the IRA goes away and certain subsidies go away to a Ford and a GM, given where Tesla is in the marketplace, that should be a benefit. I could see, though I'll be very straight with you, I don't like the idea of him having influence over NHTSA per se, because I think that it's very difficult to have somebody who's in a business influencing how the regulation of that business works. But maybe NHTSA opens things up, and therefore he has a greater opportunity to move autopilot and everything ahead faster. The question is, those things and maybe others, does that account for a 30% move in your mind? 30+% move.
Yes, well, it had been very depressed before that. As you know, we put our research out there. We have our team, Tasha Keeney, Sam Corris, and our price target is $2,600 in 5 years. That research is out there. You can find it. You can look at the model, change anything you want. Autonomous is 90% of that valuation. And we think the probability of autonomous has gone up dramatically. I mean, Waymo's already doing it, and they've broken through a lot of barriers, actually, for Tesla in terms of introducing the concept. Now, Tesla, with 7 million robots on the road already, learning the roads around the United States and the rest of the world. If we have national legislation, we'll be in a very good place.
Cathie, where do you land right now on Bitcoin? You've talked about $500,000 being the price point. I don't know if you changed the time horizon for that, given what's happened. Maybe it's been slower. Maybe now it's speeding up again. What do you think? And what do you think actually drives the price action?
Right. So we have a 2030 target. In our base case, it's around $650,000. In our bull case, it's between $1 and $1.5 million. Now, remember, we were the first public asset manager to gain exposure to Bitcoin in 2015 at $250. And we still, at 90,000, I think we have a long way to go. Why? Well, first of all, we're getting regulatory relief here, and I think that's one of the most important things coming out of this administration. We will get regulatory relief on all kinds of innovation, including healthcare. So the other thing is we're looking at Bitcoin now being viewed as a new asset class. It's not just a global monetary system. It's a new asset class. And what that means is institutions and asset allocators generally are saying, wait a minute, this asset is behaving differently from all of our other assets. We need to include. So I think that's the next big move. And if you look at years where the Bitcoin has halved and the inflation rate has gone down to 0.9, it's usually had a nice big move. So that's
Cathie, before we go, I got to ask you one tough question, and that is back in October, Puck wrote an article that said, why is anyone listening to Cathie Wood? And the author made the point at the time that the funds, the ETF fund, had lost $14.3 billion of shareholder value, which is an enormous amount of money. I don't think it's the same today. It's better than that. But why should people listen to you? By the way, the author gave us a hard time for even doing interviews with you.
So it's so interesting that we cannot fire our clients. And I would say we're at the flip side today of where we were in the late 2021 period. We were saying back then, hold some powder dry. That didn't happen. Flows just gushed in. Today, we're in the opposite situation. We've been great on Tesla, Bitcoin, NVIDIA at 40 cents was our first purchase, first 40 cents. We're pounding the table on that. And now we want to go after healthcare, CRISPR gene editing. If you look at J.D. Vance, Elon Musk, they're all talking about this new wave of cures ahead. So stay tuned.
But how should we think about the volatility of your fund and some of these big bets and the way you're making them? I ask because, as I mentioned, there was a period of time, obviously 2020, that ETF blew up your ETF blew up in the best way possible, right? It was up 150% or something. But then, of course, if you look at a longer term chart, it's a lot more complicated. And so for those folks who watch us and I'll ask you questions and they're listening to your answers intently, what are they supposed to think?
Two things. We have a volatile fund. We should not be a huge slice of any portfolio. We are more of a satellite strategy now, although we think this is the way the world is going. Second, if you take out that boom bust in around COVID, which caused all kinds of interesting behaviors, you will look at, for the flagship, you'll see a fund that has based for 6 years. The technologies around which we have centered our research are so much more advanced. And so we think we're a very good complement to the broad-based benchmarks out there because we don't look anything like them. And truth will win out. The biggest depressant on the fund recently has been in the multi-omics, healthcare, life sciences space. We think that's going to change, and it's going to change quickly when it does because the rubber band is stretching. We're now seeing companies like CRISPR Therapeutics, Intellia, on the road to curing diseases, which is a very different model from traditional pharma.
Cathie Wood, we very much appreciate talking to you, and I appreciate you taking those questions as well. So thank you.
Of course. Thank you very much, Andrew.
That's the pod for today and for the week. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. To get the smartest takes and analysis from our TV show right into your ears, follow Squawk Pod wherever you get your podcasts. We'll meet you back here on Monday.
We are clear. Thanks, guys.